Shankar Sharma. He shares his market outlook as well as top investment ideas for year 2014 in an exclusive chat with Nikunj.
I don't think it's a buy on dips market, save for a few stocks that you want to buy on dips. I would still be out there looking at stocks which will give me a lot of downside protection rather than big upside beta.
So you're happy to own defensives, you're happy to own IT and pharma?
Yes, happy to own them because I think, in a dislocative situation like what you might see, 3-4 months from now, 5 months from now, you want to be in the safe havens and away from stocks like infrastructure stocks like Larsen & Toubro, which, we liked them for a brief while in the last 2-3 months. But that was more, that they had been underperforming, and we thought that, in any rally that might happen, you might see a good 10-20% increase, which we got. But I don't hold out the view that there'll be secular buys, sometime in 2014. I really doubt that. So still want to be buying a lot of defense rather than be very aggressive.
Shankar, personally, you're a big fan of cycles. You always believe that equities, they never give a secular return, they always give a bunched up return. IT and pharma have had 2 or 3 years of extraordinary return. On top of last 2 or 3 good years, can they give you another good year?
I don't know. I mean, that's a good point. I don't have a clear answer to that. And I do remember the last time we were speaking on your show. I mean, my view was that I'm still thinking through. And,
you're not getting that light bulb moment.
Yeah, I'm not getting that eureka movement, in a moment. I'm not getting a big inspirational trade in my mind. I'm not getting complete clarity on how the dominoes will fall. And which is why, I've been generally reticent to profess a big call. And usually,
what is holding you back?
People expect me to give a big call each time I open my mouth. But unfortunately, I normally tend to open my mouth only when I have a big call. So it's the other way around, actually.
So what's holding you back, but?
No, what is holding me back is a very strange Jekyll and Hyde situation in the markets. The Jekyll is a terrific turnaround, which I think the government has engineered in context of a very bad inflation situation, wherein you can't really expect the RBI to be very sort of growth-oriented in the face of CPI running at 10%. And you have a fiscal deficit issue, so you don't want to be spending your way out of trouble. So you have decided to depreciate the currency and export your way out of trouble. And that is a terrific middle ground. I mean, and nobody's giving them credit for it, but they have engineered an export-oriented recovery and also an FDI-oriented recovery. So when Pepsi comes and commits 30,000 crores, obviously it's going to raise employment and land prices and give a general boost to the area where they come in, which is, let's say, in AP. Okay, but nobody's giving them credit for that. That's the Jekyll part of the argument. The Hyde part is that because nobody's giving them credit for it, they will or they may not return to power, or at least not as with as much strength as they came in 2009, and which is going to be a tragedy. In my view, that is going to be an unmitigated disaster if any other government comes to power, save for the UPA. And the UPA with the current numbers. If UPA comes back with lower numbers as we saw in 2004, when you had to have left and everybody else, they have their own sort of views, rightly or wrongly, then again that's a problem. So 2009 was actually, in my view, a perfect political formation. And what they delivered in the backdrop, please understand, from 2008 you started to have the Great Recession. Nobody adjusts for that. I mean, everybody expects India to grow 8.5% with 4% inflation, with no foreign debt, with no fiscal deficit. I mean, how on earth is that possible? That's possible maybe if the world is growing at 4 or 5%, so India is having a growth premium of 100%. When the world growth has collapsed to nothing, and whatever growth you're getting in the world is with huge monetary stimulus. India has done no stimulus worth the name. Okay, I mean, a little bit of excise duty cuts and service tax cut doesn't count for anything at all. We give no credit for that. We just want to believe that India is some exceptional economy imbued with great powers of the 33 crore gods of this country. And it can defy all laws of global macro. And we'll have great growth with no inflation, perfect employment, great employment generation, great capex boom, without adjusting for the fact that, guys, we are in a terrible global macro situation.
But global macros have improved.
They have not improved. They have been. There is a corpse. The global macro is a dead man. You keep periodically getting some movement in the dead man because you put some more electricity through it. That's not improvement. That's nothing. Stop the electricity, turn off the life support. Let's see then where global macro goes.
If you think that global macros are not in place, why are you bullish in developed markets?
because I'm bearish on emerging. So, look, ultimately it's a seesaw, right? So, and I've said this many times that despite all the monetary stimulus and the injection that the US has given to its markets, all you got is an S&P 500, which is roughly flat over 14 years. 1650 or 1680 was the 1999 S&P high, and we are at about 1800 now. 14 years on and trillions of dollars later, you're almost flat. You're not even adjusting for, in fact, in real terms, therefore you're down.
So if $9 trillion of fresh central bank policy action has given you 2% GDP growth, one would assume that for 2014, liquidity will again play an important role. If liquidity is likely to remain benign, do you think fund flows to India will continue to surprise us?
No, I don't think liquidity will remain benign. So, in face of the taper, I don't think it will be benign.
But he's put a number there, $5 billion.
And to buttress that, I don't believe taper will ever happen to its entirety.
Okay.
I think it'll be like a social security. It's like a dole. Let's be clear about it. The U.S. economy cannot afford a zero monetary stimulus situation at all. I mean, so all these numbers are coming out of the stimulus. Stop the stimulus, GDP growth will go down to 1% or less, and you have a big unemployment problem already. So I don't think it's ever going to go away. But that said, I think India, because of the fact that they have fixed their CAD problem and made it into a CAS problem, which is a surplus, will now have an exceptional currency relative to its older peers of the chronic current account deficit countries, which means that people will shun those countries and come to India for the mere fact that this country is no longer a deficit country. So hence we'll have a relatively stronger currency. So I think irrespective of how global liquidity plays out, India will be still okay.
We will get the lion's share.
We'll get the lion's share unless we have a big problem in the Lok Sabha 2014 elections.
So do you see a situation of a big P expansion in the first half of 2014? Because that's been the story for last 2 years. Earnings haven't expanded. We have seen 2 years of single-digit earnings growth, but P multiples have expanded.
I don't know. I mean, anyway, I don't believe too much in P multiples and all that. So, you can pick a multiple and justify any story. So, 5 can be great, 5 can be terrible, 50 can be great, 50 can be terrible. Infinite can be great, as we know in many tech companies. So, I mean, I'm not a big fan of that. My view is that India will do exceptionally well relative to emerging markets. But unfortunately, emerging markets won't do well relative to developed. So we will keep our head above the water, at least till the elections. But I doubt if we'll be flying way above the water. I mean, that I think is a very cap trade. Because, I mean, at least my reading is that you're looking at a very problematic situation.
What's on your radar in terms of large cap stocks? Apart from L&T, what else is looking good?
Bajaj Auto looks good. And that's been a long-term favorite. Off and on, you kind of feel a little bit leery. But by and large, looks like a good place to be in. And overall, the two-wheeler space has been very, very strong. Even Hero Honda, even though, I don't like it as much. That's been also a good performer. Autos overall have been a reasonable space, this year. Maruti has done well, Tata Motors has done well. So, I mean, autos are good. Pharma has been reasonably good. And obviously, you've had IT being very, very good, in fact, this year. Consumers, they got too expensive, but I still do believe that, they don't go down much. Because all anecdotal evidence is that, rural India is still consuming. Maybe not as much as they were 2 years back, but they are still consuming. So I still do believe the old favorites still look okay. I mean, we haven't liked Reliance. And despite all the sort of good news around it, stock has really not sort of kept up to the promise that it had. And we haven't liked infrastructure for a long time, save for a trading bet on a Larsen & Toubro kind of thing. That still continues to be the sort of overall view. We haven't liked metals again. They have been again not very edifying at all. So I mean, again, like I said, there is no big contra thing that I'm seeing right now, which you will look back after 6 months and say what a call you had, because I don't have one. Actually, I think there's terrific value in small cap stocks, to be honest with you. And obviously can't talk about individual stocks, but there are a lot of stocks out there which have been crushed. It takes a lot of hard work to figure them out. But, let's say, take a stock like CEAT Tires. I mean, that's done very well. I still think it looks very cheap. So I'm sure there are many like that out there. So rather than the sort of the big cap stocks which do look expensive, and at least in the good ones are reasonably priced and more than reasonably priced, I think the small cap end, micro cap end, I think that's the place where we need to be spending a lot of time in. That's probably what the story of 2014 looks like, more than taking the big macro bets on India.
So if someone has to invest the Shankar Sharma way, what should one keep on the radar for 2014?
If you want to invest the Shankar Sharma way, then you have to keep a very, very open mind and be ready to change your mind every Monday. I think you have to be out there meeting a lot of companies on the small cap side. I mean, I think that is the big theme that I think emerging in 2000. It's already started in 2013. I think it will gather momentum in 2014. So you might have a very flattish or a down market if their numbers in the Lok Sabha elections are not up to the market's expectations. But I don't think the micro cap will suffer much because they've already suffered a lot. And you might see a big move even from now until May for those stocks. They might be up 100% and they might then correct 25%. So I think that's a space where we need to really get out there, out of our comfort zones, because those sectors, that entire space in the market we have shunned, pretty much from the time the market went into a bear market territory from 2008 onwards. It's probably time to revisit that.
So don't really bet on the haystack. Bet on the sharp needles from the haystack.
Yes, which is a departure from the way I normally do things, to be honest with you. I mean, I always bet on the haystack. I don't look for needles. But I think, again, one needs to be flexible in markets. I think this year we'll need to look for more needles than the haystack. Because the haystack looks overburdened.
So what are you nibbling at?
No, nothing. I mean, I'm still looking. I mean, every day I ask my analysts to, send me some numbers on some obscure company, and they keep wondering why this old man has probably lost it. I just like to look at eyeball numbers and see.
But you've not made up your mind somewhere.
No, like I said, I mean, I wish I had a very clear line of sight, but I don't. And I've said this to whoever has asked me, including our clients, that I don't have a big inspirational thing, but I do think that micro caps will be the place to be in 2014. Definitely.
Let's talk about flows. Now, so far India or emerging markets have been a recipient of strong flows because developed market economies were contracting. That is no longer the story. US, which was considered as the biggest liability for global economy, could be the growth engine for 2014. Do you think if global growth comes back, that could have an impact on flows?
Like I said, flows may not be as benign as what they were in 2013 for sure. I mean, for one, it's the taper, and second, of course, is that with the revival in the US, more money is going to go there. But remember, I mean, there's a lot of money in this world. We keep thinking 20 billion, 30 billion is a lot of money, but I mean, that's like really not even a drop in the ocean. So, even if you have a bad year, it doesn't mean that India will not get like, $10 billion in FII flows. I think that's very, very comfortable unless you have a crisis kind of situation. That, leave that aside. Normal course, going concern basis as an economy, I think flows are going to be just fine. And as I mentioned also, with a stable currency and a competitive currency, you are going to get a lion's share anyway. So even if there's $100 going around instead of 200, you might still end up getting, instead of 30%, might start getting 40% because, you are looking a lot better than your peers, are looking. So I don't think we should be too concerned about, flows, because there's still a huge amount of money in the world. And not everybody wants money to go back right to the US.
Quite true. Okay. There's a sectoral allocation.
Yeah, exactly. A lot of layers to the onion. So
fair point.
Yeah.
Okay. Let's talk about rupee. When we interacted with you just a day before Diwali, your view was that rupee is now looking stable. It has settled in a range. Do you think for 2014, 60 to 63 or at max 64 could be the rupee range, or it could even correct below 60?
I hope it does, but I hope it doesn't correct a lot more than that, because I don't think we need to go to 50. I think we are doing just fine at 60, 61, 62. The fear is that if you have a bad outcome on the elections and you have a downgrade, from the rating agencies, I don't think they mean much fundamentally, but purely technically it might have a knock-off effect on the currency, at least for a short run. So that, I think, is a real risk that you need to be mindful of. But short of that, I think the rupee looks just fine, because if you just look at the numbers, I think you will have a surplus on the current account, and you will have, obviously, on the capital account, you always have a huge surplus without any doubt. So FDI is going to be very strong, FI is going to be strong. I mean, I think we should be adding $20-30 billion a year to our forex reserves, which unfortunately we have not added because a lot of the money was going into gold. But now that we have clamped down on that, I think all that money is still going to come to India anyway and not get exported out by way of gold. So therefore, we'll keep adding a serious amount of money to our forex reserves. So I don't think there is a currency problem at all. On the contrary, I do hope that we don't go to 55 because I think this is just right.
This is the sweet spot.
This is the sweet spot. Of course, inflation is a problem. So for that, maybe some quarters might want the rupee to be stronger than 61, 62.
2013, your call on going short on banks. Is that pillar still looking very shaky?
Yeah, I think, look, again, they are, I think, down for the year, right?
Yeah.
The bank X. While the index is up what, 4-5%?
6%.
6% for the year and near all-time highs. So that tells you that what was really the darling of the markets for the preceding 2-3 years has not been the darling of the market this year. And that was really something that we went out on a limb. And I still do believe that, there's not much there to get excited about. And suddenly now the market has become sort of a movement around where the bank nifty goes. So
it's a large part, 27-28%.
I think a bit smaller now because they have underperformed. It used to be about 30%. I think might be about 23, 24, thereabouts, whatever it is. So my view is that they are good trades, but I don't want to be buying them on a secular basis.
So you're not a big fan of the cyclical trade. You're not of the view that economy has hit a bottom, go and buy into cyclicals. Cyclicals will recover. If economy bounces back, banks will lead the rally.
Like I said, that I don't have a clear line of sight on how durable the recovery is in light of May 2014. If that was not there, if that was not there, I'd be in full agreement with this perspective, what you just articulated. But I am very tempered by what I see as a very, very, problematic situation.